To fade or not to fade? That is the question. Thursday, big down opening. Buy, 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 buy. Friday, big up opening. Sell, 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 sell. Today, another big up opening. We'll discuss what to do. Britain gets rid of its tax cut. Does that mean inflation's going away? Does that mean the Fed's going to back off its policy? We'll see. Got a new economic indicator for you. We'll discuss that in a minute. It's the Coles recession indicator. Mitch, let's get this week started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Just like that, we're up 43 and a quarter handles, 3640.75. That's off the pre-market high. I looked, and that move off the open took place in about 4 minutes. So the buyers were ready to go off that 6 p.m. open. The buck is down. That's helping, down 41 cents at 112.79. TLT trying to get back in triple digits, up 77 cents, 99.34. Crude, worst week in a while after the cuts. That's down 70 cents at 84.91. Gold catching a bid at $15 at $1663.90. Silver going up more on a percentage basis, up 46 cents, 18.53. Bitcoin back above 19K at 19,420. And Ethereum's up a mere $21.50 at 13.17 even. Let's bring in Mitch and the new other co-host of our show, Fabian. Come on, Fabian, where are you?
Oh, you can't even see me. Look how beautiful I am today. Look at this. Look at the dew. Look at the dew.
What does that mean for the markets, folks? What does it mean?
I don't know, but it was overdue. I tell you that. I asked my wife. I was like, "Look, I'm flying away with the wings on the side. Everybody's making fun of me in the chat. I'm like, I probably do need a haircut. I'm not sure about the real job yet, but I've got a haircut."
Did you go to a real barber, or did you go to one of those beauty salons where like they wash your hair and then they cut it and then you go under a blow dryer? Did your mom ever used to do that? You know, go to the salon and then sit under the blow dryer?
I don't think she did, but no, I actually just went outside, and my wife, who has become a very good barber since the pandemic, did the old snippers, clip, 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 and I'm good again. I felt like I lost about 2 pounds.
It feels like it's your first day in college, man. At least you look like it, man.
What are you, 220 triple D? 220?
Now 218 because I lost 2 pounds of hair.
Getting down there, getting down and dirty.
So,
all right, Mitch,
let's bring it back. Rein us in here. We can't just talk about my hair the entire show, although I would love to.
Woo! All right, let's get into it. Looks like you weren't the only one getting a cut here, as the UK's finance ministry, Jeremy Hunt, scrapping here the cut in the lowest rate for income tax of 20% to 19%, as well, cutting the dividend tax rate, the reversal of off-payroll working reforms, VAT claim backs for tourists, and a freeze on alcohol duty rates. Hunt also announcing here, UK's finance ministry, that they announced that the energy package designed to subsidize consumer and business energy bills would only run until April, and then they would take a reassessment.
All right, that's a mouthful there. I don't know anything about that, but I can tell you we are just shopping around here. Still Titanic style. Yes. Bob continues. We bobbed under. We thought that was the bow and off the CPI data. We bobbed under, but then we bobbed back up. She's still bobbing there. She hadn't went down yet. So she bobs up a little bit. UK. She bobs down a little bit. Obviously, we'll get another earnings warning probably tonight because this is the way it is. So bobbing. We're still hanging around the 360. We did the undercut. we did the rally a little bit, but then we gave back the rally. So it was some trader, and it was I read on Zero Hedge over the weekend. I believe it was a Goldman trader saying, nobody, not one person, knows what to do right now, meaning buy or sell. I'm kind of in the same boat. I think we just fade a little bit here, but to just come in and predict, oh yeah, we're going to 3,000 on the S&P, Katie bar the door. We've already had a significant sell-off. A lot of bad news is priced in. The bull case is that. So I still am sitting here market neutral. People saying, that's, not making a call either. It kind of is. I'm just playing market neutral here because this is not an easy market to figure out what it's going to do tomorrow.
We need 2 up days in a row. And I'm not talking like silly up days, like we had on Thursday and got us leaning kind of like, okay, yeah, this is it. We're going to get out of here. We need like two solid grinding up days. And on Friday, we were talking, and some people on Twitter, they're like, oh, you guys were bullish, whatever, buy the dip. There were just patient buyers on Friday. That was it. There's some people that chased on the open and got their head chopped off. But we were going down, and there was bids to hit. The people were deploying. The people that didn't chase on Thursday, they're like, okay, either I got to cover a short, or my company may have some good earnings or something. And then boom, those people that bought the deeper dip are being rewarded today with the market being up. Like I said on the opening, to fade or not to fade. That's been the last 2 opens have been great fades. Today is what we got to decide.
I mean, it's hard. It's hard to make a call here, and we are going into the thick of earnings season. Yes, we've got a few banks, but that's really not the thick of it. Thick of it's kind of going to start this week and really into it next week. But Tuesday we're going to get Netflix. Tuesday we're also going to get Goldman Sachs. Wednesday we're going to get Tesla. Notice I go over IBM. I didn't even mention them. Poor IBM. Thursday we're going to get the most important stock. Here's the calendar. Beautiful, Mitch. Thursday, we're going to get the most important stock to the entire market that moves the entire market. We joke, but we're somewhat serious. Snapchat. It is important because what they do is Snapchat will move Meta, which will move Google, which will move all online advertising. So we know Snapchat's getting TikTok, but the last quarter, they didn't care what the reasoning was. They just said, oh, online advertising not doing well because of Snapchat, I believe it was last quarter, and they hit everything. So that's the story. It's going to be some big names this week. We're going to get a lot more information. Obviously, we know inflation is still running rampant, but we do have earnings season. So what does it mean? We're going to find out.
That we will. We'll be waiting to see what happens with all the earnings stocks this week. There could be some surprises in, and will Netflix make positive subscribers, or will they continue losing? They're expected to actually increase subscribers, so I definitely will be watching that. And you guys can catch all the earnings reports, especially the notable ones, right here. We are going to be playing the earnings call from Netflix tomorrow. So come on over and hang out with us as we get through the earnings call, and you guys can talk with me as I go ahead and I'll be watching it in the chat. We can go ahead and talk about Netflix.
Just before we do that, the Bank of America numbers and stuff. And Dennis, I know you're on this. I mean, if this, and I don't know if it's going to be this report, but if this thing could ever put 250 in the rearview mirror, I'm just going to go to the monthly here. Then it's a whole new ball game here. But I think until they keep this thing under 250, I think the Bears in control. But and then this is where it's so difficult. They come out with a good report, they gap up at 255, and you're like, oh yeah, you got to fade it, and then it doesn't come in. But on the monthly chart, I don't think I've ever seen Netflix do this kind of monthly. And I know some are 252, some are a little bit lower, but if you're a real Netflix bull, yeah, that's like a huge level. So we'll see if we can get above it.
I don't know if I'm a Netflix bull or bear. I am long a little bit in my wife's RSP because I got to be long something. I think the valuation has come down low enough that it's not crazy anymore. But again, my first purchase was terrible. Second one was good. We've already talked about that. So sticking with it for her. I got to be long something. So, you got to pick some stocks. I don't want to be 100% cash because, again, I don't have a crystal ball on this one. And sometimes I got a good feel. I don't even really have a good feel on this one. I don't know. And I even going to those last CPI numbers, I've been like the same thing the last few weeks. I'm kind of market neutral, just selling, little trading, selling the rips, buying the dips, selling the rips, buying the dips, just doing or shorting the rips as well, just trading it that way because it's a tough market to call right now.
I like this setup at least as long as it can get over last week's high of 238. So
it's closer.
238,
It's a good number.
80s. Let's see if we can get through there.
Sure.
If we can get through that weekly level. I feel, it could get a little push right before it. One thing to note also, this is right around where last earnings call was. Right when we got knocked down, we were right into these levels. The first day we got knocked down into an opening price of 245. So let's see if we can maybe make our way there as we have. I'll be looking for a bullish day on Netflix. We'll see what happens. Let's go. Let's keep going. Let's get to the Bank of America earnings. Let's talk about those earnings here. EPS at 81 cents, beating the 77-cent estimate. Sales at 24.5 billion, beating the 23.60 billion estimate. I know you guys were here for the earnings last week on the bank. So tell me, how did those go?
But good.
Well, it went pretty well.
Yeah.
Overall, I would say good response to all of them, really. I mean, we had Morgan was the only ugly one probably, which I kind of expected. Also Goldman, I'm scared of the Goldman earnings for the simple reasons that investment banking, I think, is going to have a tough quarter. But your traditional banks, they actually did pretty good. I mean, I think it was Friday. Was it Friday, Joe, we were talking about that? One of the days they were all green. I don't know if it was Friday or
JP Morgan. Yeah, JP Morgan, Wells Fargo, and Citigroup.
Yeah, all the majors were green. And they all held up pretty well. I mean, Citigroup held the gains pretty well. Wells Fargo, a little bit giving back, but trying to hold the gains from the lows. JP Morgan, a little bit giving back, but trying to hold on. So far, so good. But what's really the catalyst here to drive the banks going forward? And I'll throw that back to you guys. Whenever we come out of earnings season, they just become market stocks again. Don't they?
Well, I mean, the conventional wisdom is that banks are supposed to do better in a rising interest rate environment, right? And that's what we have. On the other side, recessions are not good for banks, right? So I think the recession or the threat of a recession has been overshadowing it. So I don't know. I just say the market, if the market could, somehow if the Fed could let up, the market gets a rally, then I think it will go along with it. That means it'll be, a little bit more positive as far as the recession, interest rates, inflation coming down. But I mean, if it's still just going to be this kind of, market getting hammered, then I don't know if there is a catalyst to get the banks higher. I saw the pop here over. This is a big move for Bank of America. And it likes to continue. It's a lot of times once it gets going one way intraday, it's really hard to rock the ship. Of course, this is earnings. Let's see what happens at the top of Friday's range. That would be the key for me. If the Bulls really want to keep this and test 33, then they need to hold the top of Friday's range. And I believe it's right here, right now. Yeah, 32.63. So you are opening in to previous day's high, which is probably, right around there with its average day range. So 32.63, keeping an eye on that one.
All right, let's keep going. Let's go towards the Splunk news that's out there. I'm seeing a lot of people talk about it. Let's get towards it. Wall Street Journal reporting Sunday that Starboard's value is just under 5% stake in Splunk. Starboard plans to push Splunk to take action to boost its stock price. What do you guys feel about Splunk?
Starboard moves stocks. You have to respect it. We've seen this time and time again. Elliott, Starboard, those are the movers and the shakers, really, and from an activist perspective. So it's not surprising it's getting a nice lift on this. On pullbacks here, maybe, but again, there's an ugly trend here. Am I chasing it up 10%? Never in this market. One thing I've learned in 2022 is when you are in bear markets, you don't have to chase. And we've seen, time and time again, they get these pops, but then, they start to leak away. So unless we're turning this around and going into the raging bull market, I'm not chasing Splunk today.
Interesting levels here. I'm going to go with Triple D on the not chasing. You're opening into your October 7th high, $78, right? If you get through there, why not take a look at 80, right? And if they get really crazy, 83.36, that was your high on October 5th. And I agree with Dennis. I mean, if this could come back down, it's not going to happen today unless the market completely falls apart. But sometimes these stocks, they get the lift and then people kind of forget about it. People take profits. And if it came back down to the 72, 73 area, with Starboard being on board, that's would be my potential buy area.
We'll see what happens there in Splunk. Let's keep going. Let's go to Continental Resources as they announce a definitive agreement to be acquired by the Ham family for $74.28 share. The tender offer would be approximately 58 million shares of common stock at CLR.
What's the is it cash price takeout? I didn't see.
74.28.
They're paying, man, for all these cash takeouts again today. I mean, I don't know why you want to pay up that much with the time value of money. It's oil sector here, so there's almost zero antitrust risk. So I guess they just say it's a done deal. It's just a matter of how much time it takes. Decent premium, not a fantastic premium. I mean, when your stock gets taken over, a lot of times you think, man, I'd like a better than 7 or 8% takeover, but we are in a bear market and the premiums aren't what they used to be. So I don't know. Trade's probably over here. Just, time value of money makes me, not buy it up here for sure.
It's a bit. I mean, I think it's like the family that started and owned the company. So, man, they're buying high, right? They're taking it out. So there you go. You got the cash price, and then we got another deal out there. BP's getting down and dirty, and it doesn't look like anyone really had the memo in LFG on this one. At least the way it traded on Friday. Give us the news on what is it? Archaic.
Archaea Energy to be acquired by BP for approximately $4.1 billion. This is a deal for approximately $26 per Archaea Class A and Class B shares in cash, or a total enterprise value of approximately 4.1. And LFG, I got to give it to them. Whoever gave that ticker to them, shout outs to them.
Short-term day trade, I shorted it up at 25.85 just because it's 15 cents away from the takeout price, and I'm up 10 cents in it so far. Not going for huge amounts of money, but I thought it should come in 20, 30 cents. So I'll limit my comments to that, but just full disclosure, I do have a position in this, and I just think when you get that close to the takeout price, I don't see a hell of a lot. I don't see another suitor coming in and paying more here. It's a huge premium. Unlike the other one, which wasn't a big premium, this is a big premium. There's no antitrust risk or anything, but when you get within 15 cents of the takeout price, I just think there's going to be people coming in to ring the register here. So maybe it comes in 20, 30 cents. I'm not looking for a lot on this, and I'll probably cover it today.
BP, I mean, you got the number on that 126. BP is trading up on this news so far.
Small,
so I don't
Joel.
know.
It's too small.
Too small of a deal?
Yeah, and that's what you have to consider. So when you're looking at M&A, the biggest thing, because everybody will get in their head, if you're paying a premium for a company, that acquirer goes down. That is true, but depending on the market cap. So let's just do a fun exercise here. The BP market cap, which is a huge, obviously, oil company, one of the biggest in Europe, is $94 billion. And we are talking about Mitch, you just said what the market cap was this? Was it 4?
The deal is worth $4.1 billion.
Yeah, so you're talking a very small deal for a very big company. So that's why investors like me, we're going to knock that little bit off the market cap. Probably not. And remember, BP is already traded in Europe for a number of hours on this. It's an ADR, so it's actively trading and open in Europe right now. So that's the consideration, is when you're doing and you're looking, for premiums or discounts on deals, look at the market caps. And when a company's buying, a $100 billion company and it's only a $200 billion company, they'll probably hammer that acquirer. But when it's a fraction of it, talking 3, 4, 5% of the market cap, then in this case, 4% of the market cap, not a big deal. So probably, muted response from BP shareholders.
What do you guys feel about oil? It is starting to come down here. I was checking it out
today,
on the front month, and it is coming down. How do you guys feel about the oil stocks? I was dead right last week, but I've been wrong on oil overall. I think you got to sell rallies in the oil stocks, because if you think we're going in a recession, I think oil is going to get hit as well. So, or if you think we are in a recession, I think it's going to get hit too. I think we've seen the highs for oil in the short term, and I'd be a seller of rallies, all of them.
I gave my take a week or so ago. I mean, it's just like this OPEC plus. They come in, they cut, it rallies, it fades, and then it fades again. And they're like, okay, we're going to cut more. It's just like a broken record with them. So all those gains are gone and then some. We're on a 6 month losing streak. We had a 6 month winning streak on a 3 month losing streak. I mean, it's just like the same. And I just say, I'm not going to repeat the same argument. I mean, recession or no recession, moving ESG or no ESG, 5, 10, 15, 20 years, we're going to be using less oil. So that's
Joel's long-term bearish oil. And you know what? I'm long-term bearish oil too. I agree with that view. I don't think the market cares about 10 years from now, though. It cares about 10 days from now.
10 minutes.
It's just trouble. It's trouble in the overall economy. I mean, if we turn around, and the economy starts to go hot, does oil lead the charge out of here? It might. I can see a case both ways. I'm not positioned really short oil stocks or long oil stocks. I'm just, but if you were asking me, and you were, I would think I'd be a net seller of oil stocks on rallies.
We'll see what happens there in oil stocks. Let's go to Rupert. Murdoch is exploring a recombination of Fox and Fox A. And this would also be with News Corp, a move that would bring his former wide-ranging media empire back together. What do you guys feel about this? Is there any edge here?
I just don't even care about either of these companies. It's the biggest trouble. So, I mean, you got Fox, which obviously, sold a lot of their business back to Disney back in the day. And then you got News Corp. I mean, does anybody really care about these stocks? And that's probably why, muted response to this point. Fox is getting hit because it's the rumored acquire here and to bring them back in. And News is up a little bit here, but I just think I don't even care about either.
Such a fragmented it's just,
it's under attack to the industry. I mean, content is king here. They obviously are content producers, but you just got streaming, you got content coming from everywhere. It used to be you turn on your TV, you got CBS, you got ABC, you got NBC, and you got Fox. And those were your content makers. That's what we were watching. It's just changed. There is content coming from everywhere now. So these businesses just don't have that, luster that they had 20 years ago. So why do I want to invest when, you've got content coming from everywhere and your core businesses are under attack? So these have been, tough investments for a long time, really. I mean, especially, you look at News Corp. I guess, they've held up somewhat. But
I don't know. Were they ever much higher? I guess I'll go
back to the financial crisis and stuff. I'm not sure. You can go back on your charts if you want, but I mean, still $26 when May of 2021, March of 2021, everything was just overpriced. So, is it getting back there?
You forgot about WKBD Channel 50 Detroit, Dennis.
Well, that's where we used to watch the Tiger games, wasn't it? Wasn't the Tiger games on WKBD?
Are you too young to remember Sir Graves Ghastly? Now that we're coming up.
Oh, yes. I've never heard of Sir Graves. Tell me about Sir Graves.
They just used to show all these horror movies and everything on Channel
What station? On Channel 50?
Yeah.
Channel 50 had some good stuff, Joel. We're really in the D. We're
too local for me.
I know what we have local listeners and they'll remember.
Yeah.
I still love Malfar Superstar, though. You can't beat Malfar Superstar. Remember Malfar Superstar flying high to bring you a far better deal. And he's got the cape and he's flying around the car dealer. Those are the best commercials.
MasterCard is trying to take down the wall of worrying and is launching a program with Paxos, a crypto trading platform that's already in use by PayPal. And so MasterCard will handle regulatory compliance and securities, as these are the two core reasons that banks cite for avoiding the asset class. So they're going to banks and saying, well, we'll run it for you. And so MasterCard launching a program with Paxos.
If you announce something with crypto back in January of 2021, your stock would be ripping. If you announce something with crypto in October of 2022, your stock is often dipping or just doesn't care.
You're pulling strings.
Doesn't care. The crypto story, sorry folks, the crypto story, it's not over, but it is as ice cold as it possibly can get. Maybe eventually starts to catch fire again, but right now, nah, not into it. Sorry.
look how far you are from even
Although I am
Friday's
long
high.
MasterCard, I should disclose. Long
Yeah.
term.
I would just keep an eye on Thursday's close. This had a 1, 2, 3, 4, 5 day losing streak, and then on that crazy Thursday, we tacked on 10 handles. Had a good day or 10 points. Had a good day on Friday. Got to 98.62. But we're nowhere. The mark. I mean, this should. You think the way the market's up, there's supposed to be good news. I'd be keeping an eye on 93.96, 293.96. That was Thursday's close. If you're looking for a little bit more of an upside target, and as far as buying this, intraday support maybe at the close if you get down there, 88.69. But as long as the market holds in there, I don't think you'll get that low.
Now, a company that was favorite out of the pandemic for their technology that helped get these houses to sell without being able to go in them. Now, Goldman Sachs coming in here with a downgrade on Open Door to sell and lowering price target to $2. Tough outlook there in Open Door.
Closed door.
I'll be back in
all
1
these
minute.
things. Yep, all these things are. It just the online. Housing. It was the phenomena of the pandemic. Whether you look at Redfin here, $4. Everyone thought because of the higher commissions that real estate brokers get that you'll be able to cut into the market. You had that absolute buying frenzy during the pandemic. I still think it's there, but I don't know.
Look at
Do some
Zillow.
stuff in the market. Yeah, Zillow. I guess people don't mind paying the extra few, points and, getting a broker and getting more money out of it. So, I don't know. If you shorten it at 237, what do you got? You got $2 with their target. Risk reward ratio is not there, but just all these stocks, Zillow, ZG. You had your housing bubble, and there it is, man. Wow, Zillow was over like 210. So general
Yeah,
comments on that. Not selling, not buying.
a pandemic low for Zillow down towards $20.04. Right now, we're sitting there at 27. When we get back down there toward the pandemic low, be something to keep on watch. We'll see
Okay.
what happens there.
Can't disagree with that.
All right, let's cover a couple more of the earnings stocks that will be coming up later this week. We've covered some Netflix. We talked a little bit about Snapchat. What do you guys feel? Let's talk about. Let's do United Airlines. How was that Delta Airlines earnings? I know I didn't catch that. Let me just
I'm
take
gonna
a
keep
look
an eye.
right quick.
Well, first of all, I want to take a look at the Delta chart because they did. There you go. Finally got through that 31. Wow, you did it on Friday. I took my eye off this thing. Wow, 31 we'd been talking about as major resistance. It blew through there, got faded once again, came back down to that area, old resistance, new support. Back up again today. Oh man, I would have been more of a buyer at 31. Now we're trading up 66 cents. Got to take out Friday's high, 31.92. I think that might be tough today. United Airlines, UAL, that's trading up. I mean, the demand's there. And it seems that you haven't had any of like your Southwest Airlines major disruptions. So, people are spending. People are still spending. They're still traveling, and I just want to bring in. Even though my buddy was in town and went to the Michigan game, I did come up with a new economic indicator. It's called the Coles Recession Indicator,
Ha.
and there is no
Let's see that
recession
one.
at Coles.
Was it
I had
busy?
to go pick up a vacuum cleaner, and oh my lord, I regretted it. I was about 15, 20 deep in the line to do it, and then the line in the checkout was around the corner. And then also always, if you want to use the Michigan MDEN indicator, I went in there with my buddy, and the line, I've never seen the line go all the way through the store. And this is a huge store. It's probably 15,000 square feet, all the way through the back of the store, up the stairs, and then all the way through the second
Are you
level
sure they
going
weren't just
back.
returning Amazon packages?
At Kohl's?
And then that way they go for the Amazon or packages.
That's it.
I'll
That's
just
probably
tell you what I
was.
saw.
Yeah.
Well, you know what that tells me a
Look at
little
this.
bit
Well,
more?
Cole's right near the bottom. Maybe we should buy Cole's right now.
Shelly Serrano asking
on the
why we
ground.
don't use Amazon because we got Cole's cash, whatever that means. You got Cole's
I don't know.
cash?
I've actually still have the small position in Cole's because I got in there at 42 and I thought it was going off the board at 60. And then it came down. I actually sold more than half of it, but I should have sold it all. I kept a little piece. Wish I would have sold it all. So I'm bag holding this thing big time here in the long-term portfolio. Actually, it's 7.37% dividend. It's $27 here now. I mean, you're pricing Cole's, significantly, like go back to even like when we were shutting stores down. This was $10 at the COVID lows, but even go back before then. I mean, you're not giving any premium to Cole's whatsoever. The dividend's pretty nice. There is still people sniffing around. It was, there still was, I know it's not going to be, $60 a share, but I don't actually mind it at $27.
One thing that I would say to me, Joel, there is I don't know if that's a good sign or a bad sign, because a little part of me feels that since we keep seeing that with the eye test, when will the eye test actually run into kind of more what we're actually seeing in the market data, that there is the consumer strapped for cash? I think that shows me more and more that recession is coming versus we're already in it. Because at least the consumer, it doesn't seem like they're strapped for cash when you actually use the eyes out there. But that just shows me that things can get worse.
They always, but they've been doing those deals for years, like points and all this. I don't keep track of any of that stuff, but I mean, there's always been that get our credit card. It seems like that's been a phenomenon going on for a long time. But anyways, I was just looking at Coles here. I mean, I'm just looking at 28 here. Boom, get above 28.
Got to get above there.
Yeah, that's it. That looks good above 28.
No hurry to buy anything here, but there's a hard bottom at 25 on this right now. So you know where your out is. I mean, it's not going to probably be my out. I've got some of this stuff in the long-term portfolio, and people saying you got to cut those bags, and I wish I would have. I wish I would have cut it all when the rumors were that this deal wasn't going to go down. Then obviously it was 35, and then boom,
we talked about that a lot, Dennis. We talked about that. Do you listen to pre-market prep? Because we talked about it kept on popping on, like, okay, we're going to buy it at 60, and then it went like to 60, and then it came back down, and then it just
but I was in way after that.
Okay.
That was when it was 50 to 60, 50 to 60. When it got down to like 30, I think I bought like 41.
Oh,
there was rumors still around 60, and I was like, oh, that's a hell of a premium now. But it did get a pop one day, like that 47.63. That was pops on a rumor too. So I could have got out and got good. And obviously, then it just broke down the deal, and it's back at 27.28. And at that point in time, I was like, reanalyze. You got to reanalyze, and you're like, 7% dividend. Back in July, I was like, I don't think Cole's is going out of business. So I was like, I'm going to hold it from here. So sometimes you got to cut the losers. Sometimes you got to reevaluate. You got to analyze here. Again, this was never a trade. It was in it for, it was in it for the long term, but it was still just in it for, if it was going to get taken out at 60, I kind of like that upside too. And I didn't mind it at 40. I mind it now because it's 27.
All right, let's go towards the news that really hit kind of Friday, which was more that Kroger news. Let's talk about them acquiring Albertsons for $34.10, implying a total enterprise value of approximately $24.6 billion. What do you guys feel about this deal?
I think I'd be a buyer of Kroger down here, to be honest. If you get down to 40, maybe it's going to leak a little bit because it's out of favor now because they paid the huge premium for Albertsons. But this is stock that I've wanted in my portfolio for a while. It's a stock that actually holds up well during a recession. It's a stock that's got a 2.4% dividend, which is not much in this environment. But I just think Kroger actually has turned the company around to a certain extent. This ACI is a big one to swallow. How that's going to materialize at the end of it is more to be determined. I mean, and you can play it from the ACI perspective too. You can, if you don't want to do the Kroger, you want to do the ACI, maybe you have a little bit more upside. The risk with ACI, obviously, is just if this antitrust, if it doesn't work out, Kroger will go up and Albertsons will go down. So you got to analyze it from all that perspective. There will be antitrust issues, though, on this deal. Because obviously it's direct to consumers, two major grocery stores teaming up here. So I'd expect this to be a long fight to try to get this deal done, which is probably why I'm getting a huge discount on the Albertsons takeout price. But I think
it's part of a cash deal too, though, Dennis. I think it's like supposed to be 34, but isn't it like $6? Some of it in cash too. It's not all stock.
Again, and I should have over the weekend. I didn't analyze all the details of this deal. I should have. I just never got to it this weekend. But I just know there's going to be there's going to be antitrust issues here for sure.
I'm hearing, and I don't know where I read it or someone told me, Amazon's making a big. I think they're making a big push into the grocery store. So makes me a little, like everything's automated. Like you don't even have to reach up off the shelf. There's like a little thing that goes up, takes it off the shelf for you, and checks it out. So they did the Whole Foods thing a long time ago. So we'll see. We'll see what happens.
I need to upload. I actually have inside an airport. I used one of those Amazon stores where you don't need to check anything out. You just literally grab it and you walk out the store and it already paid it for you.
Really?
So I have a video of that. I'll bring that for us tomorrow. We can check that out.
Right, I thought it was pretty interesting. Where's Tim?
He's right now he's restarting his market structure edge. No, he should be back here in a second, guys. I haven't seen him hop in here. He should be here any moment. We should get to a market structure edge Mondays. There he is. You see what happened was the sun wasn't up yet. And so he was waiting for the sun to peek across the horizon so that we could be ready for the new opportunities with today's Market Structure Mondays. Let's get into it. All right, Tim Quast here. Welcome on. How's good old where we at today?
Right. Hey,
he's
sorry
home.
To keep you waiting. Part of the reason I was about a minute late is I was rooting through the data, and it was it's not great, and we'll talk about that. But I am in Steamboat Springs, and you can see that I got some sun yesterday out hiking around in the fall colors. They have been it's just been spectacular up here in the mountains, and so we have engaged in the frivolity of hiking around in the mountains and seeing as much of it as we can. So it's been fabulous up here.
What time does the sun come up out there? There's no sun. It's dark behind you.
No, exactly. I'm hoping after we finish here to take a cup of coffee out on that patio and fire up the fire pit and watch the sun come over. So I can I'm just seeing a little light over Mount Werner, which is out that direction. And then we're going to go hike up Emerald behind me.
I guess you're 2 hours behind us, right?
Yep. Yeah. We're mountain time. And I wish we would not, I wish we would stop jacking with the time and just leave it this way so that we have, the sun comes up about 7 and it goes down about 6:30. That's just about right.
Yeah,
that doesn't help traders, I realize, but
is there a glimmer of hopes in this market? Is there a glimmer of hope?
Well, there are always things to trade, and it's just a matter of whether there is an abundance of them or a paucity of them. And it's it's interesting that if we went back to about midweek, using market structure edge, there was a flurry of abundance, a short-term abundance. And we were, I said to the edge users, I think we will get 1 to 3 good days. And here are the things that look great, like Darling Ingredients, DAR, one of the ones we highlighted, which, by the way, I mean, it was up 10% in those 2 days. There are times when things look great. And then the curious thing is that they all vanished. And I say, the math, there's nothing wrong with the math. If the math stops showing you things to trade, the problem isn't the math, the problem is the market. And so we had this huge surge Thursday, and we can talk about what causes that. In fact, it's something I wanted to cover, but I'll keep this focused. But then all of the opportunities vanished, and sure enough, we gave it back. And I said to the edge users, I think we got all that the week offered in one day. Doesn't mean we're not going to have ups and downs. We could have a decent day today, but there is a reason for that, and it has nothing to do with earnings, which are picking up here, or changes in economic or monetary policy in England. It has to do with options expirations. And I don't want to jump ahead. I think we should come to that at the end if we can. But those are the things that cause the market to move. They create opportunities for folks, but you have to be very careful.
Big options expiration here coming up on Friday. We do have some big earnings coming up this week and next week here. Tim, let's get right into market structure edge here, and let's look at some, maybe we should start with a couple of, we could start with a couple of the earnings stocks here, like a Netflix this Tuesday.
Okay.
Love to see the market structure here. What your thoughts on supply demand, what it's looking like going into the Tuesday night print for Netflix?
Okay, let's do that. And while I'm doing this, traders, let me, there was a point I wanted to make about what prices the stock market. I read this piece in the Wall Street Journal by Akani Otani and Karen Langley. And Akani Otani she's a great market commentator, but the cadence never changes. It's that the market is whiplashed because investors are on edge. I would like to see a show of hands of investors who would like to see 25% of their portfolios destroyed. Anyone? Anyone? No. Investors don't destroy 25% of the market cap. That's not what causes it. I'll ask this question, and I haven't forgotten, Dennis, about showing you Netflix. Yep. I'll ask this question about what prices the stock market. What price? It's not a trick question, but it will require you to think about the mechanics. What prices the stock market?
As simply as supply and demand.
Well, supply and demand, yes, but the offer to sell. There's a bid to buy and an offer to sell. What is the highest price in the stock market? The offer to sell. I'll give you a great case in point. I sold SJM when it rose. I'm quick. I take gains, not chances, wherever possible. I don't always get it right, but most of the time I can.
Yeah.
And I looked at where my trades executed, and I sold. I sell and I trade less than 100 shares most of the time. So this was a 99 share trade, and I sold it. I used a marketable limit order because the spread was about 10%.
Why do you trade below the 100? Just to kind of get in there and not be seen? Is that why?
Well, there are two reasons.
Yeah, give me this. This is good.
Okay, so there are two reasons. One, I know a trade for 100 shares or less at the market must, by rule, be filled. So that's one reason. And number two, we look at the size of trades. That is, how much money can change hands in a trade in a given stock. And so I'm very aware of that number because I know that the likelihood that I immediately fill my trade is much higher if I stay within that range. And why do who sets that range? Well, high frequency traders set that range. Fast traders set that range. By the way, if the spread between the bid to buy, which will always be lower than the offer to sell, is 3, 4, 5 cents, even 8, 9, 10 cents, I'll just take the market price. What difference does it make? And I know it's going to get filled. The biggest problem for traders, both institutional and retail, is that their trades don't fill. Then the price moves on you and you've missed your opportunity. Well, where I was going with this is one share of that trade. So I put in a trade, boom, it gets filled right away. But it got split into 6 different pieces, and one share of my order went to an NYSE RLP. What is that? It's a New York Stock Exchange retail liquidity program. So what happened is a high frequency trader immediately sold me a share through the RLP and got paid by the NYSE to do that. And that caused a bunch of other trades to come over where that high frequency trader was furnishing liquidity. That is, they're offering shares to sell. That's what prices the market. Investors don't price the market. Machines price the market. And the reason that the market goes way down and way up is because over 50% of trading volume comes from machines with an investment horizon of a day or less. And about 50% of all trading volume is created, manufactured, borrowed. That is what prices the market. So when demand is surging into the market, the machines will lift both bids and offers, and the market goes up and up and up. When flows slow to the equity market, which can be caused by investors becoming more concerned, well, do I want to continue to put money into the market? Well, now all the machines are going to know that, and they shift short, and the market goes the other direction. But it's these intermediaries that set price. That's why it's so important, folks, to have a basic understanding of how the stock market works. If we don't know how it works, how can we possibly succeed in it? So that's why it's very important to know. 100 shares or less at the market by rule must be filled. So if you're trading MRK and it's got a 1 penny spread, don't put in a limit order. Just buy it at a 99 shares at the market. Your order will be instantly filled at the best price. And know that on the way out as well. Okay, so Netflix, there's your market structure lesson for today. What prices the market is the offer. Then right below that's the bid. That's what prices the market, not investors. And it's
Hey,
whoever sets
Tim,
that.
Tim, can I ask
Yes.
one question here?
You betcha.
So let's say you want to go bigger in something.
Mm-hmm.
Okay. Like how
Right.
many times can you like get away with like going 100, 100, 100? Because, you know, in this market, I mean, before they start moving on you, let's say you want a 500 share position. I mean,
Yeah.
are you going to be able to do that with it? I mean, maybe something like Bank America or whatever, but
Right.
you know, do you ever do that? But boom, 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 you know, like you want 1,000, but you go 100, 100, 100, 100, 100, 100.
I do.
Something like
Actually, I do. Yeah, and I did it
Okay.
with KDP Friday. So
Okay.
I like the supply-demand spread in KDP, Keurig Dr. Pepper, and it has a very narrow spread, usually a penny spread. And I bought, and I tend to buy in size. I buy hundreds of shares of things. So I bought 99, 99, 99, 99,
Right.
99, just like that. I just duplicated my order and I kept buying, and the price actually went down.
Ooh.
Right? Yes, because at the market, now I've scared the machines, right? I have scared the machines and they set fewer prices. Well, the market moves in my direction, right? So that's important to know. That when the machines stop setting bids and offers, the market drops 1,000 points. When the machines resume setting prices, it goes up 1,000 points. They are the things that determine the outcome because they're sifting all the bids and the offers, and they're seeing whether there's a supply or demand imbalance. That's what high frequency traders do. That's what algorithms do. And so, yes, I use it all the time, Joel. I'll use it on the way out too.
You know why else 99 shares, and I know a lot of professional traders, you know, doing the same thing, like just keeping it small and in between, because it doesn't change the market. So let's say the market on like a thinner stock, on Bank of America, who cares, right? But on a thinner stock, if, you know, even like, you know, like let's say like a, you know, Goldman Sachs or something like that, you know, $300 stock. If you go, if it's $300 to $300.20 and you go $300.01 bid for 99 shares, it doesn't change the market. It's still 300 share bid because you're under that 100 threshold. Unless you have other odd lots that add it up, you'll still actually, you know, not change the market. So you're not pushing the market away from you. So it's a way for them to hide in between. So that's why you see some traders, you know, using under 100 shares. For that simple reason is that they can hide in between the bid and the ask.
Exactly. And that, by the way, Dennis, that's a great description. And we tell public companies public companies don't know how the stock market works. They should. That these are rough averages. About 85% of all trades are doing what you just described. They're sitting there. I describe algorithms like a cheese grater. And the order is a block of cheese. And the algorithms are going to grate the cheese to fill the order. And 85% of orders in the stock market are a form of midpoint pricing that's sitting in there in small pieces, trying to fill orders at an effective price. Because that's what drives things for institute. I had a conversation with the whole team at State Street last week about this. You know, they're concerned about transaction cost.
Yeah.
And we're saying, have you factored these things in? Because size, liquidity, price, all those things matter. Supply and demand are the big determinants. So they're, everybody's thinking about that. That means 15% of the trades, roughly, are at the bid and the offer, trying to price the market so that the cheese grater goes up and down and fills the block. That's the mechanics of the market, traders. I wish it was a bunch of investors. Most of it isn't. Most of it is a constant battle to set price, and you can see that, though. You can see that in supply and demand, just like we're looking at Netflix here. Demand is not great in Netflix and hasn't been for quite a while. That's the green part of the graph. It's not terrible. When it's at 5 or above, the price tends to do better. The gray part is price. When it's below 5, it tends to do worse, particularly if the supply side has just jumped. Right at the end of the quarter, supply shot way above the trend and demand declined. Well, what did price do consequently? It fell. What it's doing right now, the reason the price popped on Thursday was short covering. Short volume dropped from 60% down to 53. That's still too high. It still means that over half of all trading volume in Netflix is short. It's a supply. That's not a sustainable condition that will lift price. It will short term, but you have to be aware of that, traders. If you look at that, you say, okay, if Netflix moves its volatility, take that gain. And here's what I mean by its volatility. If you don't mind, Dennis, if I just finish this really quickly.
No, that's good.
This is how would you know how much a stock should rise or fall? Well, you can look at what the machine setting the price do, and that will tell you what you should expect. So for instance, I buy KDP because it went down its volatility. Now I know that I have a very high probability today of making that, right? So that's what I'm doing. If we look at Netflix, so here's Netflix, and its average volatility, it moves 6% every day. So it's a great lesson. If you know that shorts covered, it's a gamble. I don't like to buy falling demand. It's like trying to catch a falling knife. It's dangerous. But you could know, okay, shorts covered. It's a good day in the market today. If I buy it, if it's up a little bit, like 1% at the beginning, I have a reasonable chance of a 5% return today. And if you get something close to that, then you should take it, because that's all you can get. This is your reasonable expectation of a short-term return. We use it all the time. If KDP is down 2% and its supply-demand divergence is good, I'm going to buy that because I might make 2% today. That's all I'm after. Because if you can do that over and over, you will be rich. If you try to guess at what somebody's going to report, or, is 15 times earnings a good multiple? That stuff, I'm sorry, folks, that isn't the way the stock market works. I wish it did. But if 80% of the money is focused on earnings multiples are a good predictor of future outcomes. If 80% of the money is focused on something else, then you have to know what that something else is to have a predictable outcome. And a lot of it is just what I described: setting bids and offers, looking at supply and demand, how much do prices move, what's the chance I can capture some of that? That's what you're after. By the way, I do this every Thursday, and you guys are free to come. I do a live demo most Thursdays at 2:30 p.m. Eastern time on how to use these things to make good trading decisions. It's free. Just go to marketstructureedge.com, hit request a demo. You'll see October, is it the 20th is Thursday. I'll do this, and I'll explain these things and give you examples about how to do it. And it's, it's useful.
All right, I see there that it's saying that the D trend on Tesla has bottomed. What does that mean?
Okay, so let's look at Tesla, which reports results this week during options expirations. Not a good idea. It's not. We will tell public companies, don't do that, because you're serving up on a platter an opportunity for speculators to bet directionally and destroy the message you're trying to deliver to investors. So having now just excoriated Tesla for doing that, let's look at supply and demand in Tesla. It's bottom. Demand is bottom. See how prices come down? The reason that Tesla has declined is not because people hate the Twitter deal. It's because there's no demand for Tesla stock, and supply had been high. Now, I would say it's tailing off. So supply is now down below 40%. Demand's on the floor. It could move. That stock could move. It's a gamble because demand has not yet started rising. It does better. There's a better chance of producing return if demand is rising and supply is falling. There was a nice opportunity to make modest gains in Tesla there. That's the only time, and that was right into September options expirations. People bet on options. That's what happened. But they were immediately short right during options expirations. They shifted from long to short, from calls to puts, and down the price went. Well, you can see all that. You can know, so you're not caught out, traders. If you see that happen, it gets to 10, supply jumps up, get out. Wait till those conditions reverse. So here's my thinking, Mitch, on this. The stock could move on results purely because any increase in demand against falling supply is going to lift price. But buying something at 1 is risky, particularly when we look at the broad market. We look at the broad market. Here's what I'm concerned about. Broad sentiment has topped. Demand, when it gets up to that red line, tends to predict further declines. On the supply side, supply is still below trend, but at 49% of all trading volume in the S&P 500, that's what we're looking at here, which is about, call it 85% of market cap, is short. So if supply is at 49% and demand now falls, I'm not saying it will. Here's what we're going to look at. See, it did this last time. If supply tails off, if this goes down and demand stays right at 6, the market can go up a little more. But we are not at a point where there is a high probability of gains in the market. There's a higher, better than a 50% chance that the market declines, not in linear fashion. We could pop up and down through options expirations. But these data tell us the market retains a downward bias overall.
All right. Well, thank you, like always, for Market Structure Mondays. You can't get better than that. Definitely check out Market Structure Edge if you guys want to go ahead and check out this data for yourself. Appreciate you coming on, Tim.
Good to see you guys. Have a good week.
Tim.
Always a good one. All right, let's go ahead. Let's take a wrap-up look at the markets.
Yeah, I think we got to get Roblox in here. It's the mover here at 8:30, right before Tim came on. RBLX came out with the metrics, and it is getting a nice lift here in the pre-market. So we got new movers here. RBLX, maybe just go to the pro, give us the details here, Mitch, and then Joel break down those technicals.
Sure.
All right, looks like Roblox shares are trading higher after the company reported September 22 key metrics. Daily active users were at 57.8 million, up 23% year over year. And the estimated bookings were between 212 million to 219 million, up 11% to 15% year over year. So a little lift there on Roblox.
So beat up. I mean, these stocks are all beat up. The metaverse was obviously not the play to be buying in 2021, but they're so beat up now. Any type of good news here, there's going to be short squeezes and relief pops. So that's what you're seeing here this morning. Above 40, it's kind of interesting, but I'm not going to chase. Again, I can't chase these stocks in these heavy downtrends because it just feels like there's too much overhead supply. But don't underestimate the power of the short squeeze here either. So I think I'm just going to sit neutral on this one at this point. Up 12%, it's a nice lift for the stock, though.
Yeah, I'm looking at this 40, and it's jumping out to me. We had a high just under 40. It just ticked 40. 39.81 was that high. Wide open between 40 and 42. I mean, it looks open, but I kind of like the way Young Money 22, he's looking at sympathy trade. So, maybe not hop on this, this rocket ship, but if there's something else out there, because we mentioned at the end of last week, growth just wasn't, growth tech just was not, that did not really participate on Thursday, and it got hit on Friday. So Unity's making a little bit of a move. I don't know what Kathy's up to. But be careful on the Roblox. I think you hold 40. You take a look at 42. Look at Kathy, up $1.05. So I think if I wanted to buy this, I think I'd kind of look for a sympathy play instead of chasing the Roblox.
Yeah, you can definitely look for Unity. You can look at Snow. Those are all going to be options that you can be looking for some sympathy type of play.
Yeah, I'll just say in the background here, I've already bought Unity this morning off of this. So I have full disclosure, just a day trade, trading it for the sympathy here. But same thing, I'm a little bit ahead of you there. So you've said it. I'm on the show here. I am long Unity just off this Roblox play. I just bought it.
Wow, how is that for I mean, that's the way Triple D. That's why why mess with the hot rod, right? I mean, this rope, because some people are thinking, oh gosh, I'm going to hop on this above 40.
Again,
Well,
I'm not
to
sticking.
40.
I'll use Roblox when you're trading these. You got to use Roblox as your leader, though. If Roblox starts to roll over, you got to sell the Unity too.
Yep.
But I'm kind of with you guys in the chat here. I think you could have a little sympathy move here. Not looking for to marry this position, just a day trade, getting the nice pop in Roblox. I automatically think Unity sticking around for a little bit, but I don't know how long. Roblox starts to roll over, I will sell Unity. So keep an eye on RBLX.
All right, let's take one more chart here, 9 a.m. here. Will Apple hold on? It seems like that 138 last week held on, and going to keep watching that level.
It ripping again, man, off this Roblox news. Apple, big move for this. I don't know exact. Wow, 143. Someone got really excited on this one, so I'd hold out for a target 143. That's not even near Friday's high yet.
What was that 143 print? Is that from 4 a.m.?
Yeah. Was that?
Dumb traders at 4 a.m. that just pay anything for stocks. Yeah.
You know what I think, and I'm gonna hop after this. But just like a general rule of thumb here, and I don't know how much this rally is going to continue. I mean, to go up to Friday's highs is going to be a big move. But I would keep an eye on that close from Thursday, because I know it's below, it's well above the highs for the day. But a lot of people that got caught on, that bought that open early on Thursday and then kind of didn't pay attention. You're coming back. Some of these are coming back up to your Thursday closes. And just to illustrate an Apple here, and I didn't know that before I said it, your close on Thursday was 142.99. And you got to, boom, 143. They're like, oh, I'm out. So take a look at that. So, all right, everybody, great job, Mitch. I'm going to go do pre-market prep. Plus, this is a synthetic Thursday for me. Going to be here Monday and Tuesday. And then Mitch is going to be driving the bus on Friday. Both Triple D and I are going to be out. So,
what is going on? They didn't give me the memo. We would have done it.
I gave you the memo. Dennis didn't give you the memo.
You have 4 days. Find a
replacement.
We would have done that pre-market prep vacation day. We just all meet up on the beach.
I told you a month, and then Dennis is like, oh, I forgot to tell you, I'm not going to be here on Friday. So, all right, everyone.
I never take a day off, and look, I'm taking a day off.
All right, guys, no worries. I'll let you slide out of here. You have a good one, Joel. We'll see you a little bit later. Dennis, have a great day.
See you, Money Mitch. Thanks, buddy.
Best. Trade on, my friend, and we will keep trading here on Benzinga. Of course, we got live trading coming up next. Futures action at 11. If you guys haven't checked out the futures show, check it out. And definitely, if you want to learn a little bit about the futures action, how you can trade it, I think that's one of the best shows, especially if you're trying to learn how to hedge a little bit on days like today. We're getting the SPY to come from that, really hard ending of the day on Friday to spiking back up here to 363. It's been a already big move from yesterday's Friday's close, about 1.56%. We'll see what happens today in the SPY. Of course, stay tuned for this week. We got some more surprises right here on Benzinga. You don't got to go anywhere. Hit the subscribe below, and I'll see you in a few minutes on Live Trading with Benzinga.